Before you sign your life away for that student loan, let's talk about what student loans are, how they work, and things you should look out for before you sign your name on the dotted line. So first of all, what is a loan? A loan is a sum of money that is borrowed and is usually repaid with interest, right? The interest means if I let you borrow $1 today, I want $1.25 tomorrow. Something you should also know about the interest on the loans, right, is that it accrues daily, right? So the amount you originally borrow, which is called your principal balance, a percentage is going to be added to that every day, which is your interest, right? Which means that what you borrowed at first is absolutely going to grow over time. So just something that you should really pay attention to. So here are a few student loan statistics I think you should know. One, the outstanding federal student loan balance is $1.693 trillion, and that's a lot of money. Two, 42.7 million student borrowers have federal loan debt. I'm one of them. I'm not proud of it. Don't tell nobody. Three, federal student loan debt represents 92.2% of all student loan debt. You'll see why later. 7.79% of student loan debt is private, including $29.3 billion in refinance loans. Crazy. And the average federal student loan debt balance is $38,375. And it's higher for private loans, which can get as high as $41,618. Okay, so just some stuff you should know before you sign your name on the dotted line. Breaking news, because of the big ugly bill passed the summer of 2025, the student loan options at the federal level have changed. For student borrowers, you are still good, right? You can still get the direct loan that you have to pay back with what? Interest, yes. You can borrow up to $5,500 in your first year of school. For parents, though, it gets a little bit funky, right? The Parent Plus loan has changed a little bit. Before, you can borrow up to the full cost of whatever you needed for your child's education. Now you can only borrow up to $20,000 per child per year, right? Over the lifetime of the child being in college, you cannot borrow more than $65,000 per year, which means you just have to plan accordingly. You need to make sure that you have a diversified list with affordable schools to make sure that you can make this work for you and your family. Back to you in the studio. Federal direct loans come in two forms. We have subsidized and we have unsubsidized, right? So subsidized means that the interest is going to be paid on that loan until 6 months after graduation. So you don't have to worry about any interest accruing until after you graduate, right? Unsubsidized, it means that interest accrues immediately. So as soon as you take out that loan, that interest is growing and growing and growing and growing, right? With the Parent Plus loans, they fit into this category. For student loans, they'll be broken up into these two parts, right? So you're going to have a subsidized part and you're going to have an unsubsidized part in your $5,500 that you're allowed to borrow as a student. So here are some student loan options from least risky to most risky, right? So the direct loans for students are going to be the least riskiest option that you have, right? Fixed interest rates, right? A smaller number to deal with, a smaller number to borrow. So you're going to be fine there. If you have to take out that 5,500, you're okay to do so because it's not going to be an exorbitant amount to begin with, right? The Parent Plus loan gets a little bit tricky. Yes, they have fixed interest rates, but Also, right, if you're taking out a lot of money, right, this is something that you have to think about how you're going to pay off. So as a parent, I would really, 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 really deeply consider other options before considering this loan. Okay. And then we have private loans, and private loans are the most risky, right? There's so many things happening in this landscape right now when it comes to inflation, possible recession, right? All of these things can balloon your interest rate, right? Which means that you're going to owe more money at the end of this thing, right? And so if you can avoid a private loan, I highly, highly recommend that you avoid it at all costs. Try to stick with your federal loans if at all possible. So what happens if you don't repay what you owe? Well, one, you're going to lose your ability for future financial aid. And that's going to be a huge problem if you want to go to school, you want to do other things. That's going to be a big problem for you. The other thing is you can mess up your credit score, right? And your credit is going to be king for all the things that you want to do. You want an apartment, you want a house, you want a car, right? All those things, credit cards, right? All those things require a good credit score. So that is going to be on the line for you as well. And the last thing is that you can get your wages garnished. You know, they can touch your check at work, child, right? They can take your money before you even see it, right? And that's a big, big problem. And we don't need those problems, okay? So here's my advice to you. One, know the rules before you play. College lasts 4 years, but guess what? Debt can last forever, okay? The other thing is to have a conversation with your family and plan out your finances before signing anything. Okay, when I say anything, I mean anything, right? Please make sure you are thinking about what is possible, right? Don't bite off more than you can chew. Okay. The other thing is to borrow what you can afford to pay back. Okay. Like, let's be responsible, friends. And the last thing is to pay attention to what's happening with regards to student loans. There's so much going on with regards to student loans. They are changing the rules on us as we speak. And so we really need to pay attention to what's going on and communicate with your loan servicer if you have any hardships. So let's say you do take out a loan and things are not going well for you. Call them up and let them know, right? Because what can happen is that they can do something called a deferment, or they could put you in forbearance. Either one will stop you from having a lot of negative consequences, like the stuff that we talked about, right? Check being garnished, bad credit, and all that stuff. There's some things that can be done to save you from that if you only communicate. Well, that's all I have for you today. Make sure you look over those loan terms and you make a plan to borrow responsibly before you sign your name on the dotted line. Get it, get it, get it, get it, get it, get on track. Get it, get it, get it, get it.